Hello, everyone. Thank you for joining us for another webinar with AgriLogic. This is our final webinar of our series, Risk Management Education Series with AgriLogic. My name is Diego with Farm Awareness Coalition. I'm joined here with Tom and Kim with AgriLogic, and we have a couple panelists with us as well. This is being recorded. We upload on our YouTube channel by the end of the week or by next week. If you have any questions, again, please put in the chat or Q&A. But yeah, I'm going to give it to Tom. And yeah.
Thank you, Diego. Hello, everyone. Hopefully you are able to see my screen now. I'm going to start off with a little summary presentation to kind of review what we've talked about throughout this webinar series, and then lead into our panel discussion where we'll introduce and talk about some of the risk management programs available to you as producers. So our objective today is to give a brief summary of what we've gone over previously, and then engage panelists in discussion of those topics, and then finally give you the attendees an opportunity to ask questions of the panel members about the topics presented. So looking back at our series, we've covered quite a few topics related to risk management. Our background, AgriLogic, is heavy in crop insurance, so we had several programs, seminars talking about various crop insurance programs. But we also introduced concepts or issues related to record keeping, food safety practices, as well as an overview of many of the FSA programs. Today, we'll be wrapping all that up with our panel discussion. So really want to give an overview of what is risk. In a simple definition or a simple explanation is risk is the possibility that something negative will happen within your operation. And really, I think we all know that in farming, it's not a matter of if something will happen, it's really a matter of when. So it's really trying to look at those variables and come up with an appropriate strategy for dealing with the various elements of risk. There's in a simple description, there's two main components of risk. Frequency and severity. Those two variables kind of make up the measure of the risk that you're looking at. So when you're evaluating, you really have to consider what are the odds of something happening. Is this something that's likely to happen every year? Is it once a decade? Those sorts of things. And then really sort of assess how impactful that risk will be. Is it something that could really end your operation or serve really as a minor impact to your operation? So as our series schedule showed, we've talked about many different risk factors associated with agriculture. It's easy to kind of fall into the environmental aspects for the production risk. Well, it's dry, we're having a drought, or actually a flood came through and washed out my crop. Those are sort of the obvious things, but there's many other elements to risk and risk management. There's obviously market risk, price, and what kind of revenue you might receive. Depending on the type of operation you have, there's general liability. Actually, every operation has some form of general liability. But if you were a pick your own type operation, then you have visitors coming to your operation that you may have to deal with risk associated with injuries to those individuals. So the type of operation you have can certainly determine the types of general liability issues you may have to deal with. Record keeping is something to be aware of, for insurance purposes, and participation in some of the FSA programs. It's important that you maintain certain records for being able to participate in those programs. Food safety practices, procedures for dealing safely with food, particularly if you're doing some sort of processing of your food. And then there's just financing and disaster recovery issues. Do you have enough operating capital? What happens if a tornado were to tear through your operation and uh, inflict major damage on your operation? So these are all things that you may have to consider. So really, you're looking at a continuous process of assessing and managing that risk. So there's different strategies you can take in dealing with the risk. One way is to avoid. Again, if you're a fresh fruit producer, it's one way of eliminating some risk associated with food safety is to just sell the fresh fruit. Don't process it. Don't make jams and try to sell those jams on roadside stand, as you might increase your risk of introducing pathogens into the jams during processing. You can work to reduce risk if your livestock operation, investing in an entirely new fence could reduce the risk of livestock escaping your pastures, as opposed to constantly patchworking an old fence. Sometimes it may make sense just to retain risk, and that is, if the severity or the frequency is such that it's somewhat minimal risk to your operation, it may be a best strategy just to try to build up a rainy day fund and assume that risk on your own. And then, of course, there are other options of transferring risk, either through crop insurance or other liability reducing insurances through property insurance, and those sorts of things. But reviewing all of these things, you have to consider the cost and impact of each of those strategies, and there will always be trade-offs. What's the cost benefit of each strategy? And really, it's the purpose of risk management to do this review and select the best strategy or the combinations of strategies that best protect your operation. So today we've brought in some folks from various organizations to talk about some of these issues and talk about some of the programs their organizations offer. Today we have Joshua Coleman from FSA. He is the state outreach coordinator for Texas. We also have Eric Mortimer from FSA. He is a Texas State farm loan specialist, and he'll be able to talk about some of the financing options that FSA provides. We have Randall Whittlesey, who's a relationship manager with Capital Farm Credit, talking about some of the programs available under the Farm Credit program. And we have Kim Harris with AgriLogic Consulting. She is a senior crop insurance policy analyst and has extensive experience in the crop insurance industry. So with that, I'd like to, no, did I stop? I need to stop sharing my screen, don't I?
Need help with that? Let me see if I can get.
Yeah,
Let me see.
I've lost my screen, I think.
No worries. This is what I'm gonna do.
So Tom, if you go to the top, a lot of times it'll drop
Oh,
down.
there it is. Yeah, I
Yeah.
got it. All
It
right, thank
disappears,
you.
it hides it on you.
Yep. Sorry about that. Thank you for that assistance. Okay, so well, I'd like to start off with the panel. One of the things we've heard about through our webinar series, and a lot of the questions have dealt with financing, acquiring adequate capital. Randall, would you maybe be able to start us off by talking about some of the options or some of the programs that Farm Credit has available for new producers?
I'll be glad to. Thank you very much. And what let's start off a little bit about, if you've never heard of the Farm Credit system. Much like banks are regulated, much like banks lend money to folks for various consumer reasons and also commercial reasons, Capital Farm Credit is part of the Farm Credit system. We're regulated through the Farm Credit Act, very much like banks are regulated through the FDIC. So we are an agricultural lender. We are nationwide. Capital Farm Credit is located in Texas, specifically. We have other sister associations across the nation and in Puerto Rico that perform the same function that we do. So here later on in the webinar, you'll see a website that we've provided that'll give you the ability to go and look in your specific location where you can reach out to the farm credit associations that serve your area. So again, Capital Farm Credit, we're located in Texas, and we are an agricultural lender and also provide other financial services to the industry as well. But we're going to focus on some of our lending programs today. And I'm specifically in what we call our YBS AgriRoots initiative, and those programs are geared to young, beginning, and small farmers. That's what YBS stands for. We have we have specific definitions within Farm Credit for that, and a young farmer is characterized or defined as someone that is 35 years of age or less. A beginning farmer is one that is defined as been in a farming operation, production agricultural operation for 10 years or less. And small farmer, and you may not think this is very small, I certainly don't, but one that generates $350,000 a year or less in gross cash farm income. So that's where we get the YBS from. It's been an initiative in Farm Credit for quite some time. There's been a new focus on that, and with that, Capital and other associations across the country have begun developing certain programs to help assist folks in those categories of young, beginning, and small. What we've got at Capital, that we've got about 3 different programs that we can discuss today. One of them being our Ag Vista program, which is geared both for traditional and non-traditional ag production operations. It is, and when we define traditional, we're talking about, we'll use something as simple as cow-calf operations or row crop, corn, cotton, things of that nature, when we call traditional. Non-traditional, and I'll go out there on a limb here in Texas, just since 1999, the Texas Department of Agriculture has started allowing oyster maritime farming, and so basically oyster farms. And we've had the opportunity to finance a couple of those down on the Gulf Coast. So that probably would stem as something as non-traditional or microgreen cultivation, container plants, things of that nature. So with that being said, the Ag Vista program that we have is set up to help facilitate some of those beginning and young and small farmers in any operation, traditional and non-traditional. Some the components of that is it does have an educational program, financial literacy program that we require our participants and applicants to take to provide some background and education in basically financial structures of businesses, balance sheets, profit and loss, building a financial team, for some examples like that. But again, the loan amounts on those are limited for term loans for $250,000 per applicant. You can obtain an operating loan of $100,000 per applicant for an aggregate amount of $350,000. There are some waiver of fees on those programs, and also there is some interest rate concessions on that program as well to help facilitate the introduction into some ag operations. Secondly, we have what we call a next generation program. This is there's no loan limits on this. It's more geared toward the participants. They have to have one requirement of that is they must be in farming operation for 10 years or less. They don't have to be young, they don't have to be small, but they do have to be a beginning farmer to participate. They can be beginning and they can be young and small, but they have to be a beginning farmer to participate. It's geared for a mentorship program where you may have a family member or a supervisor or a cohort that may be assisting you, a landlord, so to speak. And also it helps facilitate possible transition of family farms over to the next generation, thus the name Next Gen. Coupled with those two programs, in order to help facilitate possible liquidity shortfalls, we've developed a down payment loan program that is specific to those programs. It is limited, again, to $150,000 down payment. There's a possibility that you could possibly, if you needed that source, you could go in and get 100% financing on certain loan sizes. So we do not allow it to be with another lender. We would be a second lien to ourselves at Capital. So there are some specific requirements of that. And in any case, our loan officers are aware of those programs. And again, we have 62 offices across the state of Texas. We cover 192 counties, primarily in the areas that it's easier to say what we don't cover, and that's pretty much the northeast part of Texas. We cover the other Panhandle, West Texas, and south along the Gulf Coast and over into East Texas. So that's a little bit of what we do at Capital for our young beginning small farmer programs. It also, that Ag Vista program, it serves specifically, we name underutilized farmers and historically underserved farmers, as well as our veterans. They do fall into that category.
Thanks, Randall. Now, I certainly understand that y'all service primarily Texas area, but many of these programs or similar programs would exist with the other farm credit lending institutions. Is that correct?
That there are some other there's several associations across the country. Just to name a few, there's Ag West out on the western side of the United States, Compierre in the north central part of the United States, Greenstone as well. We've worked and had conversations with them in helping and assisting in developing these programs. They may not be exactly like ours, but there are similar programs out there. And again, I encourage you, when we give them that website, they can go through and find the association across wherever the person is or applicant is located, that they can go and find the associations that cover their geographic territory.
Okay, thanks. Now, Eric, I believe I understand FSA also has some financing options available. Can you go over those quickly or briefly?
Sure, absolutely. Thanks for the time today. Well, I'll start with the smaller operations. Mainly what we've got for those folks are what we call the microloan, which is basically an annual or term operating loan with a dollar limit cap of $50,000. There's some other, we're a little bit more lenient on some of the eligibility criteria versus our standard loans for other larger operators for those larger dollar amounts. Security is pretty much the same. But basically what it is you can borrow up to $50,000 for any operating loan purpose, be it for an annual purpose to feed, fertilize, anything like that. Or you can use it over a term basis to purchase foundation livestock, or maybe you want to purchase that tractor or that hay baler or something like that. One of the nice shining stars about this program is we actually offer an interest rate for veterans and beginning farmers. You're able to choose the lower of the regular operating loan rate or 5%, depending on the economic climate at the time you get the loan. So in the past, I know I've made loans for microloans with an interest rate as low as 2.5%. So currently that interest rate would be 5% because it is 0.25% lower than our current operating loan rate. On the flip side of that, we have some larger loans for those larger producers. We have our regular operating loan, which has a dollar limit of $400,000 to be used for those same operating loan purposes, for those annual needs or those term needs to make those foundation purchases. We also have the farm ownership loan, which is to purchase real estate or to make improvements on real estate. And that's a maximum term of up to 40 years with a current interest rate of 5.25%. And that is a fixed rate. All of FSA's interest rates are fixed rates. We do work jointly with area lenders in our guaranteed loan program or joint financing. In addition to that, we also have a youth loan program, which wouldn't apply to these folks, but something to keep in mind if you're looking to maybe, when you're talking about generational, maybe you want to get the kids started in something, maybe you want to get them started in a small agricultural operation to add on to yours. But for the most part, what we've dealt with primarily, there's a big push for the microloan operating loan and the microloan farm ownership loan. You can get a microloan farm ownership loan in conjunction with a microloan operating loan, and both of those dollar limits are $50,000. We do have, much like Randall was talking about, we also have a down payment loan program. And as far as the risk management that we're talking about today on the webinar, FSA does make emergency loans that might be able to help put a producer back in that financial place they were before the disaster. We do production loans. We also do loans to replace those buildings, those structures that might have been affected by the disaster. And everybody knows in Texas, we have a disaster about every 6 months. So, I would advise, we have 32 loan offices across the state of Texas. We cover the entire state of Texas and Puerto Rico. Each of those loan offices is staffed with either a loan manager or a loan officer and a program technician. Those folks, if they cannot help you or cannot get an answer to you about your specific issue or your specific loan application or your specific enterprise, that's what the state specialists are for. We have 5 of those at the state office here in College Station, and I'm one of them. But as far as our loan processes go, I advise anybody that might be interested to reach out to those folks in one of those 32 offices.
Okay, and similar to Farm Credit, other states would have those loan officers as well.
Absolutely. I'm talking just here in Texas because I'm a state loan specialist in Texas, but it is a national program that is under the Farm Service Agency, under the administrator. So you can pretty much go to any FSA office in any state and ask questions about farm loans, and somebody should be able to help you.
Is there some requirement or reason of why I might go to FSA for financing versus going to Farm Credit?
I did not want to talk about that. But
okay. Sorry.
One of our tenants, folks that are familiar with FSA, several years ago, we had a motto, and it was the lender of last resort. Then we had a marketing rebranding a few years ago. We're the lender of first opportunity. Now, the reason that being FSA had a bad rap, we required people to go to the bank and be told no. Okay, we don't do that anymore. What we do is if you want to apply with FSA, we will look at your application. We have those relationships with those banks, folks like Randall and other area banks. We have relationships with those folks. And if you come to us and we look at your application and we think you can go to the bank and get that loan, we're going to have you talk to the bank and we're going to be right there with you. But historically, FSA has been known that you can only go to FSA if you can't get credit elsewhere. Now, one of our requirements is that you are unable to obtain credit from a commercial lender. That does not mean that you have to be turned down by that lender. Basically, what that means is we're going to take a look at your financial information for you, and we're going to determine if you meet any of our local lender standards. If you do, we'll ask you to go to the bank and talk to them. Maybe the bank does, maybe your operation is too risky for them. Maybe it's a value-added facility and requires USDA permitting and that sort of thing. And maybe the bank just is not familiar enough with that enterprise to want to extend credit to you. Or maybe you're a small farmer and you don't have the liquidity that the bank requires, or you don't have the collateral that the bank requires. So there are any number of reasons why you may not be able to obtain credit at a bank. But please don't think that we're requiring you to be told no by a bank. That's the old FSA. We're the new FSA. We're here to help folks. So just keep that in mind.
If I can echo some of Eric's conversation there, is that FSA has wonderful interest rates. They're very good. They're very competitive. Oftentimes we at Farm Credit cannot match those rates. Our rates are set through the bond markets and through the sale of Farm Credit Bank bonds. So, and they flow through our financing system through our district banks. So our rates are most likely going to be a little bit higher than FSA if you go and talk to them. So FSA has a very competitive pricing of their money, and we applaud that. We work, as Eric said, we sometimes gain guarantees from FSA in order to make loans through mitigation processes and risk mitigation to do so for guarantees with them. And we're a preferred lender with FSA. We have that status, so we can accelerate the underwriting if you come to us and we look to an FSA guarantee. And again, they have down payment loans as well that they work with, and they'll take a second or subordination to a primary lender as well. So again, we work in concert with FSA a lot, and they do provide a great product. With Capital Farm Credit having rates marked to market, very similar to other commercial rates, the advantage of that is we are cooperative. And we do pay a patronage back to our members. Capital Farm Credit does. We have a patronage model where we have historically, I've been here, I'll tell my age, for over 25 years. And every year that I've been here, we've paid a patronage share of the profit back to our members. So there's a way that your effective interest rate or effective cost of funds will come back to you. And get a reduction at the end of the year. As long as we do well, our members do well.
Well, one last sort of question related to financing. Eric, you mentioned looking at the applications, and Randall, you mentioned enrollment or participation in the financial literacy program. What other sorts of things do y'all look for or expect a producer to have in place to sort of participate or qualify for financing? Is crop insurance a requirement? Those sorts of things. What are the kind of risk management activities do you look for, if any, to make the final financing decisions?
We do have covenants that we do put. It's part of the underwriting process. Is conditions on loans is part of one of those 5 C's that lenders look at. And as a condition of some of our loans, if they're considered to be a fairly risky operation, we may require crop insurance. We may, and usually, you know, very much like a homeowner, a lender would require homeowners insurance on a home. If you're financing a crop or you're financing livestock, we could possibly in a higher risk situation require and mitigate the risk, some of that risk with insurance. Liability insurance, again, sometimes borrowing bases on if you've got an operating loan, we may require a borrowing base limit on how much that money is lent out on like accounts receivables and inventories of that nature. So it again, an agricultural loan is a commercial loan, and you may see some. If you're just getting into the business, you may see some loan conditions required by not only Capital Farm Credit but another lender that may seem unusual to you. Just know that it is part of the risk mitigation process when we're making a loan.
I'll just piggyback on what Randall said. FSA loans, there is a requirement to have hazard insurance on any equipment or structures, anything like that. In addition, if you obtain an annual operating loan to put a crop in the ground, we are going to require that crop insurance be carried on that crop. And then we will require an assignment on the indemnity. If the crop fails and you receive a payment, we will require an assignment on that to offset the loan. But as far as being prepared for that, you know, the operating plan, you'll have to prepare an operating plan as part of the application. The loan officer will help you work through that. But as far as simple risk management, insurance is pretty much the only requirement that FSA has to make sure that the loan security is protected against disaster, that sort of thing.
All right, well, let's move into the insurance side a little bit. And actually, Kim, can you talk about how a producer might get started with crop insurance?
Okay, sure. Thanks, Tom. And of course, a lot of the webinars that we've done to this point are really strong on crop insurance. So I'll kind of keep mine really short. Federal crop insurance is administered by private insurance companies. The risk management agency oversees that. So your agents are located right in your community. An easy way to find one is to ask around other farmers you know who they have as an agent. And then there's a place on a website, which we'll give you a link to later, about finding crop insurance agents. But the bottom line is all agents have the same rules. They all abide by the same rules, and they all charge the same premium. So it doesn't matter which agent you pick. You're not going to get it any cheaper down the street, and they will be operating totally under the same rules as everything else, because the risk management agency falls under the auspices of the United States Department of Agriculture, as does FSA, and National the NRCS. So there's a lot of where the crop insurance is just another arm of the USDA. So this program is run under the USDA. Any premium that you pay will be subsidized by the federal government. So you won't be paying 100% of the actual premium. The crop insurance policy is not designed to make money. It's just designed to break even. But the amount that you pay, that the grower pays in premium, is subsidized. So you'll never pay 100% of the premium. There are crop policies. There are a lot of different crop policies. There's some of them that are based on what exactly happens on your farm. So the larger commodity crops like soybeans, corn, wheat, cotton, there's yield protection and revenue protection available for those policies. There's over 60 commodities, and it's closer to over 70 commodities, from alfalfa seed to walnuts, covered under the actual production history program, which we've done a webinar on that. You can find it on the Farmer Veteran Coalition YouTube channel. The APH basically says this is your historical average. You can insure 1% of it, and here's what's going to, your shortfall is going to be paid at this amount. So it's pretty straightforward and simple. There are also revenue loss programs, such as actual revenue history and production revenue history. Then there's some area-wide programs. What happens in your areas? For example, pasture, rangeland, and forage in your area. How much rain fell, which would affect your pasture or your rangeland or your forage. Apiculture, which is your honeybees, and then annual forages, which are like Sudan grass and Sudex that you plant every year. So there's a lot of federal crop insurance programs. There's also livestock programs that help mitigate the risk in price loss, and some as far as you have some margin protection programs. And then you have the whole farm revenue protection, which covers everything, both crops and livestock that happens on your farm. And they have what I'll call whole farm revenue protection light, which is called the micro farm program, which is geared more towards small farmers, beginning farmers. So there's a whole, you should be able to find some kind of crop insurance for a crop you grow. If you run into a crop that you just cannot find coverage for, there is what's called NAP, and then Joshua will be talking about NAP through the FSA office. One thing I would like to mention on veteran farmers, if you qualify as a veteran farmer, every policy has an administration fee, but veteran farmers do not pay the admin fee. The subsidy amount that I mentioned, the premium subsidy, veteran farmers receive an extra 10% as far as the premium subsidy. And then there's some relaxed rules about using other people's yield records, and then some yield mitigation programs called yield adjustment that has some perks there as well for veteran farmers. So the federal crop insurance program, pretty easy to access, like I said, agents in your area, and it will help provide coverage for those naturally occurring events, drought, too much rain, too little rain, deer, whatever the case may be, and for whatever crop it is that you're growing. So all those are out there and available and pretty easy to access to protect your operation.
Thanks, Kim. Josh, can you talk about the NAP program that Kim mentioned just a minute ago?
Sure. Yeah. Thanks, Tom. So the NAP program that Kim mentioned, it is that program that's available through Farm Service Agency, and so it's short NAP. It's short for our non-insured crop disaster assistance program. And so for those crops that you are not eligible to get coverage for through your crop insurance agent, FSA steps in and covers those crops in those cases through this program. And so similar to crop insurance, you do have to come in and you do have to get that coverage before the sales closing deadline. Depending on what you're growing, where in Texas or even around the country you may be growing that crop, there are different deadlines that are associated with that. As Eric mentioned earlier, we have FSA offices across the country serving every county and all of our territories as well. And so your local FSA office, they'll be definitely able to tell you, depending on what crops that you are growing or interested in growing, which of those crops would be eligible for the NAP program that we offer. With the NAP program, there is an administrative fee that's associated with it, which is $325 per crop. But similar with the crop insurance program through that's administered through RMA, that administrative fee is waived for veteran farmers and ranchers that are under 10 years of farming or have obtained a veteran status within a recent 10-year period. But that fee is also waived for social disadvantaged producers, limited resource producers, as well as beginning farmers and ranchers. To go a little bit further, for some of those crops, there's what we consider buy-up coverage. And so just looking at the coverage levels themselves, basic level coverage is available to cover 50% of the production at 55% of market price. Buy-up coverage, if it's available for the crop, we can provide that coverage at up to 65% of the production and up to 100% of market price. And so with that, 75% production at up to 100% of the market price. And so with that, if you do elect buy-up coverage, you might be eligible to get a 50% premium reduction on that additional coverage that you may elect as well. And so mainly you might see NAP covering a lot of fruit and vegetable crops, but again, if you may be growing maybe crops that aren't necessarily usual to the area, we may be able to cover some of those as well. On RMA's website, they do have a commodity program list, which is a GIS-based tool, which allows you to see what crop coverage is available within specific counties around the country. And so generally, if you can't find whatever crop you're producing on that list, FSA may cover it. And so definitely stopping by your FSA office is kind of going to be that first step to see and how to get that coverage. But before you get to that step, is definitely the piece which is key to all of our programs, or most of our programs. FSA is going to be getting a farm number. A farm number itself is pretty much essential to doing most programs through our agency, NRCS, as well as risk management agency. And that farm number is essentially just an identifier that we use that's internal to USDA as an identifier for the physical location where the property is located. And so with that, going into your local FSA office, setting up an appointment, it'll be able to kind of walk you through that process of getting the farm number set up, doing the eligibility documents that we'll ask for, and then taking you through during your application for coverage for the NAP program as well.
Okay. So how does NAP and or crop insurance work? How, if I've gone through the growing season and I suspect it's been really dry, and I did not get the production expected. How do these programs work? What do I do?
So with the NAP program, there is a notice of loss that producers will have to file. Depending on what type of crop they have there, that reporting date might be a little bit different. Generally, if it's for any fresh harvested crops, those generally have to be reported to FSA within 72 hours of it being apparent to producers. So that way we can work to get a loss adjuster out to the field to be able to do an assessment on the damage that's out there. Generally, there's going to be a 15-day reporting period for most of the disasters when they are apparent to producers. And so if you have losses that may be due to drought or flooding, tornadoes, generally any type of natural disaster are those eligible losses for crops for the NAP program. And so if you have that notice of loss, you'll file that with your local FSA office. Your county committee, which is the locally elected board of farmers and ranchers that help FSA administer our programs, the county committee will make a determination as to whether to approve or disapprove that notice of loss. And so for those approved notice of losses, if the county, depending on the crop that we're looking at, if the loss is above that coverage percentage that producers have, then the indemnity payment would be calculated. And so producers would file the application for payment, and then they will receive a payment after that process is completed for the NAP program. But certainly, anytime you have a loss, though, it's good to go ahead as quick as you can report it to FSA, just so you can try to be within those reporting deadlines that are established that we have to work within.
And the federal crop insurance is very similar. You just contact your agent, file a notice of loss, an adjuster will be sent out to determine what your loss is. And then a indemnity check will be sent to you. So all very similar in how they work.
Okay. All right. Well, I think at this point I'd like to before opening up for general questions, if any from the audience, I just want to see if there's any last comments any of the panel members would like to make about their programs. Okay. All right. Well, then we at this point I'd like to open it up. If anyone in the audience would have any specific questions they'd like to ask about any of the programs talked about, or any other programs that might be available through their organizations. Okay, it does not look like anything's coming in. So I guess we'll go and really I want to thank the panel members. I appreciate you taking the time out today and sharing information with us. I do want to go ahead and close with I want to share some links as soon as I find. That will provide additional information about a lot of what we talked about today. So So several links are provided here with respect to FSA programs. Farmers.gov is a somewhat of a clearinghouse of access to information. But there are other sites available. There's also a subscription, email subscription that you can enter to receive periodic mailings from FSA there. We will make this presentation available on our website so that you can access these links as well. Farm credit, we've got a link to Capital Farm Credit that Randall represents, but more generally, there's also farmcredit.com, which is it has a tool available where you can go based on your own individual location, enter your zip code or county, and it will provide you information about the local farm credit institution in your area. For crop insurance, it's primarily the risk management agency, accessible at www.rma.usda.gov. And on that site, there is also an agent locator tool whereby you can go in and, again, by your location, zip code or county, get a list of agents that can service crop insurance in your area. As I said, these links will be available. This presentation will be available on our website. And if you could also reach out to Diego, and he will be able to provide these links to you as well. With that, Diego, I think I'll turn it back over to you.
All right, thank you for that, Tom. I'll put the links in the chat. Again, so you can check all the webinars on our YouTube channel. This will be uploaded within the next week or so. If you have any questions, please reach out to me and I can forward it over to any of them for any questions that you may have. Yeah, thank you, Tom, Kim, Eric, Randall, and Joshua for the time for joining us for this webinar. And thank you everyone else for joining us as well. And yeah, hope you have a great day.
Thank you.
Thanks.